Welcome to this deep dive. We had a listener request that really hit home, understanding the core of financial freedom.
Right.
So today we're diving into Tony Robbins' Money. Master the game to sort of pull out what you absolutely need to know.
Yeah, it's a big topic, and it can feel pretty overwhelming, like wading through tons of jargon.
Definitely.
So our goal here is really to give you a clearer map, using Robbins' key ideas, focusing on those practical steps that actually make a difference.
Exactly. And Tony Robbins, well, he's known as a life coach, but he spent years really digging into the financial world.
Especially after the 2008 crisis, right?
Yeah, that was the truth. He interviewed like 50 of the world's top financial minds for this book.
Mm-hmm.
The whole point was to empower everyday investors, people like you and me.
And that's basically our mission today, too. Let's extract those essential strategies from his framework.
Yeah.
We want you to get the fundamentals of financial freedom without, reading hundreds and hundreds of pages.
Okay, so Robbins lays out 7 steps. Let's just get a quick overview first.
Good idea.
1, take control of your financial decisions. 2, know the rules of the money game.
Okay.
3, make the game winnable. 4, create a lifetime income plan. 5, invest like the wealthy. 6, avoid financial traps. And 7, create a life of meaning.
Quite a list.
It is. Okay, so let's unpack this. Starting with number 1, take control. What does that actually mean day to day?
Well, at its core, it's about realizing that, look, your money, it's your responsibility, bottom line.
Nobody cares as much as you do?
Exactly. Robbins really hammers that home. Getting advice is fine, it's valuable, but you have to be the one driving the bus. No one's going to be as invested in your future as you are.
Right. So it's shifting from just like hoping things work out.
Yeah, passively hoping.
But actively getting involved with your money. And I think a big part of that has to be education, right? Financial education.
Absolutely. You don't need, like you said, a PhD or anything.
Yeah.
But understanding the basics, that's non-negotiable. Like understanding fees, for instance.
Which ties right into step 2. Know the rules of the money game.
Precisely. Fees are a huge one. Those seemingly tiny percentages they can really erode your returns over time.
It's almost invisible, though, isn't it? That's the tricky part, like a slow leak.
That's a great way to put it. It just drains away. Can I give an example?
Please do. How bad can it be?
Okay, so imagine you have 2 funds, pretty similar investments. Fund A charges, say, 0.5% in fees annually.
Okay.
Fund B charges 1.5%. Now, over 30 years, even with the same, let's say, 7% average return before fees, that 1% difference in fees, it could literally mean tens, maybe even hundreds of thousands of dollars less in your pocket from Fund B.
Wow. Okay, that's huge. And people can find these fees.
Oh, yeah. They're in the fund prospectus. You just have to, look for them and compare. It's worth the effort.
Definitely seems like it. Okay, so fees are one rule. What's the other big one Robbins points out?
It's the magic, or maybe the math, of compounding interest.
Ah, the 8th wonder of the world.
That's the one. It's like that snowball rolling downhill, right? It picks up more snow, gets bigger, faster, and faster.
So your money makes money, and then that money starts making money.
Exactly. And it just keeps building. Understanding that and just letting it work over the long term is absolutely fundamental to building wealth.
Okay, makes sense. So we've got control. We know about fees and compounding. Step 3 is make the game winnable. How do we do that?
This step is really about clarity. Setting clear goals. Robbins says you need to define what financial success actually looks like for you.
Not for your neighbor.
Exactly. Forget the Joneses. Forget these abstract big numbers, maybe. What do you actually want your money to do for you? What kind of life do you want it to support?
That feels like a really personal question, which I guess leads to that other idea he talks about, the concept of enough.
Yes. How much is enough for you?
How do you even figure that out?
Well, it takes some real, honest thinking. What do you value? What lifestyle feels right? What are your big goals? Travel, retirement, helping family. Defining enough helps you step off that treadmill of just chasing more and more.
Right. So you can build a plan that actually fits your life.
Precisely. It makes the goal concrete and achievable, winnable.
Okay, I like that. So step 4, create a lifetime income plan. What's the focus here?
This is about security, especially for later in life when you might not be earning a regular paycheck. It's about ensuring you have reliable income coming in.
Like a safety net.
Yeah, Robbins talks about creating a financial floor, enough guaranteed income to cover your essential living costs, no matter what happens in the market.
He brings up annuities in the book, I remember.
Yeah.
What's his general feeling about those?
He approaches them pretty cautiously.
Good.
They can provide that guaranteed income stream, which fits the goal. But he stresses you really need to understand what you're buying.
Different types and all that.
Exactly. Immediate, deferred, fixed, variable, they all work differently. And crucially, you need to be super aware of the fees and the complexities. Sometimes they're quite high or restrictive.
So not a simple solution.
Not always. His point is, investigate them thoroughly. Make sure they actually fit your overall plan. The main goal is just that reliable income, however you achieve it safely.
Got it. Security first.
Yeah.
All right, step 5. Invest like the wealthy. Now, does this mean we need millions to start?
No, not at all. It's not about having, secret Wall Street access or taking crazy risks.
Okay.
Robbins highlights strategies that sophisticated investors use, but that are accessible. He talks about Ray Dalio's all-weather portfolio, for example.
The all-weather.
Yeah.
What's the idea behind that?
It's a specific strategy for diversification. It's designed to perform reasonably well, or at least hold up, no matter what the economy is doing. Inflation, deflation, growth, recession.
So it's more than just buying, a mix of stocks and bonds.
Oh, yeah. It's much more specific about the types of assets and the proportions. For instance, Dalio's model includes allocations to stocks, yes, but also specific types of bonds, long-term and intermediate term, plus gold and other commodities.
Oh, okay.
The theory is that different assets do well in different economic seasons. So by holding a mix, the overall portfolio should be less volatile, less rocky, like a well-balanced ship, as you said.
That makes sense. A smoother ride. So the big takeaway here is really strategic diversification for managing risk.
Absolutely. Don't put all your eggs in one basket and make sure the baskets aren't all going to drop at the same time. Spreading investments across asset classes that react differently to market conditions is key.
Okay. Step 6. Avoid financial traps. What are the big pitfalls Robbins warns us about?
Oh, a huge one is making investment decisions based on emotion.
Fear and greed.
Totally. Seeing the market tank and panic selling everything, or seeing something shoot up and jumping in with FOMO, fear of missing out, without really understanding it.
We've all felt that pull, haven't we? It's hard to resist sometimes.
It really is. So what's the antidote?
Good question.
Well, Robbins really emphasizes that trying to time the market, trying to guess the perfect time to buy low and sell high, it's basically a losing game for most people.
Even the pros struggle with it.
Exactly. So a much better strategy is discipline. Sticking to your long-term investment plan, rebalancing periodically, and just tuning out the short-term noise. Don't react impulsively.
Easier said than done, but crucial. Okay, finally, step 7. Create a life of meaning. This feels like a shift, doesn't it? Beyond just the dollars and cents.
It really is. He positions financial freedom not as the end goal itself,
Right.
but as a tool, a powerful tool that lets you live a life with more purpose, more fulfillment. Once your basic needs, and maybe a bit more, are covered financially.
You have options.
You have freedom. Freedom to pursue passions, spend quality time, give back to causes you care about.
He talks quite a bit about contribution and gratitude, too. How do they fit in?
Well, his perspective is that real wealth isn't just about the size of your bank account. It's also about the positive impact you make and appreciating what you have. And financial freedom can actually give you the capacity, the time, and the resources to contribute more meaningfully, which in turn often brings a much deeper sense of satisfaction and purpose than just, accumulating more stuff.
It brings it all full circle, really.
Yeah.
Okay, so we've walked through the 7 steps. If we had to boil it down, what are maybe the top 3 most practical, actionable things our listener could start doing, today?
Okay, 3 key takeaways. First, I'd say, automate your savings and investments. Seriously.
Set and forget it.
Kind of. Set up those automatic transfers, paycheck comes in, boom, a certain amount goes straight to your savings or investment account before you even see it. It takes the effort and emotion out of it and just builds wealth consistently.
Puts your growth on autopilot. Love that. Okay, number 2.
Number 2, be relentless about minimizing fees and understanding taxes.
Back to the rules of the game.
You got it. Every single dollar you don't pay in unnecessary fees or that you shield legally from taxes through things like retirement accounts is a dollar that stays invested and keeps compounding for you. So check those expense ratios, look into tax-advantaged accounts like 401k or IRAs.
Makes total sense. Keep more of your own money working for you.
Yeah.
And the third practical tip,
Commit to continuous learning. Own your financial education.
don't just outsource it completely.
Exactly. Don't just rely blindly on an advisor, even a good one. Read books like Robbins, maybe others. Listen to discussions like this one. Understand the core principles yourself. The more you know, the better questions you can ask and the smarter decisions you'll make.
Knowledge is power, especially with money. Reflecting on all this, it feels like Robbins' framework is less about just getting rich and more about empowerment, right?
I think that's exactly right.
Taking charge of your finances so you can live a better, more fulfilling life on your own terms. So for you listening, thinking about these 7 steps, take control, know the rules, make it winnable, lifetime income, invest wisely, avoid traps, find meaning. Which one really jumps out at you?
Good question to ponder.
Maybe it's the most crucial one for you right now. Or maybe the one that feels like the biggest hurdle. Definitely something to think about as you move forward on your own financial journey.
Absolutely. And remember, this deep dive, it's really just scratching the surface.
A starting point.
Exactly. There's always more to explore, more to learn on the path to financial understanding and hopefully freedom.